Hey guys, welcome to this video. Didn't do too much on AUD on my stream, but if you're here now, welcome. We're going to go over the whole lot. So if you want to get started with myself, remember you can do that underneath this video for free. I've got a full free training and webinar to get you up to scratch. So let's start on the monthly for our AUD. Okay, the monthly has delivered this since the start of the year. You can see if you look carefully at each candle, okay, these candle wicks that form are rejected every time. So there's clearly weak upside bias on this. And every time they do pop up, what you'll notice as well is they coincide with this monthly resistance. Okay, so more or less around here is what I'm referring to. And that again coincides with this longer term downtrend or longer term falling outlook weakness in the AUD against the US dollar. Okay, and your stochastic oscillator is meandering somewhere in the middle of your 20 and 80 levels. Okay, so price is fairly median, in other words. If you go to the weekly, the image changes a lot. Now, if you're attempting to trade a move like this, it's really helpful to look at the other times similar things have happened, because it'll give you an idea of how this normally shapes up. And that is with lows that move you down in the market. And with these lows, then come your pushes up. And that's what creates your overall trend. And you'll notice that you brushed on to your 100 NA where we looked previously short. Well done if you took that. And you've just come down, and now you're pulling off those higher time frame moving averages. Now, the point you're getting to at the moment, if you go on your daily, is also very interesting, because your stochastic oscillator, yes, is bottoming out and it is oversold. But if you look at these pushes, every time they're so weak to the upside, there's not those buyers slamming in and whacking it up higher. All there is one or two candles, and then you find it falls. So the way it's shaping up again is extremely weak. Okay, and it's all about when you're sort of trying to catch a bounce for a long side trade, it's about understanding really what's going on in that near term. So you can see where it did bounce, if I just draw a red line, and where it has stopped already coincides with all of this, because this is your early price action levels. So if you knew that already, you would have been out of your longs and you would have traded it accurately. Now, every single time you do get one of these little jitters, it's because it's just reflecting what it's like a mirror. Okay, if you imagine a mirror down the middle here, you're hitting each level, okay, and you're finding that the price bounces off it and then comes lower. So it breaks the level, in other words, and then it does it again over here, okay, for this one. And what you found is just the same thing over here. Okay, it reflects what you've seen already. So I would not be surprised at all if you come under lower. I wouldn't be rushing in long. You know, it's a bad time to buy. I think you may get a bounce at this point, but I don't think it's going to hold specifically. I think it's going to shape up a bit like you've seen already. But you may get a further profit margin for exits at that red line I've just drawn. And the longer term outlook, I would refer to your weekly for. Okay, I think ultimately you'll get a bounce, okay, like this, and then you'll come lower under here. So if you're DCAing in, you could take light positions at those levels. Much longer term, okay, you can see that that value is dwindling. If you get even under that low, I wouldn't be surprised. So no matter how you're trading the AUD, whether you're converting currency or whatever, if you just zoom out, you can see that you've lost value since July 2011, and you're in line with value that you had at the start of the 2000s. Okay, so you can see we're just trending down and down and down, unless you see a dramatic change in monetary policy or the state of the central banks in either economy. You would find it reverses. I wouldn't be surprised if that occurs down here, but in other words, what I'm saying is I think you've got room to move. You've clearly been guided by your lower moving averages, like your 20, early rejection, and you're just coming down. So be very cautious getting long. Any longs are going to need to be light, because you're just, tiptoeing down through the market, reflecting what you've seen already. So any new entry, 65, 550 area is probably going to be appropriate. Thanks for watching, guys. Hope that helps. As always, go under this video, get my free webinar training, And I will see you as always in the next one or in my next stream like this morning. See you there.